Warm welcome to all of you. This is our Smart VRC celebrating 21 years of its anniversary. And this webinar number 107. All the contents in the presentation in all the webinars are original and prepared by our team. So it's our duty to keep it copyright. Whatever information we gather from your registration is not shared with anyone. So today's topic is SIP beyond basics. So in basic, we know that SIP is good thing, and everyone knows that SIP is the right choice for, especially for the employees, the service class people, because they are able to invest monthly. But let's see what happens after a couple of years. Most of the SIP investors are not that happy. Why? Right? And duration of this webinar will be about 30 minutes. Now, this is the comparison between BSE Sensex in absolute terms and BSE Sensex with a base of 100 in terms of SIP. So there are going to be two charts. One is the BSE Sensex alone with a base of 100 as on 1st of January 2016. As you can see at the bottom left corner, and Sensex SIP. Sensex SIP means every month on 1st of every month we are investing a fixed amount in Sensex. So what would be the difference? So the orange colored chart is for Sensex and light green colored chart is for Sensex SIP. So here is the first, we have started from 1st of January 2016 to 1st of December 2016. So it is about 11 months. In the 11 months, Sensex is up by about 20%, right? So what kind of returns you're expecting from Sensex SIP? I hope I am very clear to all of you. Sensex on a standalone basis has gained about 20% during 11 months. It went up to about 25%, then came down, and presently it is delivering 20% returns. What kind of returns you're expecting from the SIP, corresponding SIP? 0%, 25%, 12%, maybe you may not be knowing it. So here we go for the first poll. You have to answer. I hope I am very clear what I am asking. Absolute Sensex has given a return of 20% after moving up to 25%. It was, of course, it was not linear. So it moved up to 25%, then it fell down to 22%, then to 20%. It stabilized as on 1st of December 2016. Now, if I invest every month on the 1st of every month in Sensex, a fixed amount, what kind of returns you expect? So it's going to be very interesting, and I think here is the result. This is the first time ever I see that 98% of you are not correct. Yes, the answer is 0. why it is zero. That is why I said most of us do not know how to calculate the SIP returns. In SIP, you are making investment of a fixed amount, say 10,000 rupees every month. So you invested here at 10,000 rupees, here also 10,000 rupees. Every month you invested 10,000 rupees. And as you can see, your investment was more on the higher side, and only for 3 times it was less than the closing absolute return provided by Sensex, and that is why your returns will not be as you have indicated. Most of the time you have purchased at a higher price. I know many of you may be having a query how you have calculated, and we will definitely share that. So this is the SIP returns, and one thing you will appreciate is that how you calculate the SIP returns. That is one thing. Secondly, we must understand that in the Sensex, we have started with a base of 100 and we are comparing always with a base of 100. But in SIP, you are making investment every month. So in this chart, there are 11 investments, and you will appreciate that most of the investment took place in the later half. That is the last 5-6 months, and those 5-6 months are way higher than the start. And that is the reason why the returns are not that what you are expecting. It is almost zero return. So if you are starting a SIP and suppose you are invested in a Sensex, it goes up, up, up and comes down to the same level, then your returns are going to be negative. Yes, Sensex is at the same level. It went up and closed at the same level. But what you did, you invested every time when it went up, though of course in a lesser amount, but you invested at those levels, at those higher levels you invested. Of course, less units you purchased of BSC, but you did purchase, right? While in case of the Sensex, that is the absolute Sensex, you have made only one-time investment, that is at the start point. There is no subsequent investment. Try to appreciate this thing, and then only you will find that how SIP is different. It is whether it is beneficial or not to your requirement. Okay, then what happened? This is the BSE Sensex. It went up like this, and as I said, the light green is a Sensex SIP. Now between these two yellow lines, you will find that Sensex is slightly up while the SIP is at the same level. Again, this is because most of the investments you are making at the later half when the Sensex was up, right? This is how I try to, I'm trying to explain you what is happening is this white line. This white line is the total investment, right? How it is the total investment? Total investment means in the first month it was 10,000, in the second month it was 20,000, so it is cumulative. Okay, here it is 20,000, here it is 30,000, here it is 40,000, like this. It is going on increasing, and maximum weightage of your investment is in the later half here, and that is why your returns are way lesser than the Sensex, because most of the investment you have made in the later part. This you keep in mind when you are calculating the SIP returns. I will show you the formula also, and that is why the way we are trying to calculate, we are trying to understand, is not correct. We are always trying to correlate with the start point. It should not be like that, because at the start point you made only one installment of the SIP, not the all. All of the installments on an average were made something here when the Sensex was already 50% up, right? Now here is another instance. This time it is a different one. In essence, this is the period of March 2020, and the Sensex crashed. I can say it crashed because it was down too much. And as you can see from here, the gains of about 180% went down to about 125% for Sensex. And if you see by comparison in terms of the percentage, the fall in SIP was not that high because you have averaged it. So this is how the SIP works. It provides you a kind of a less volatility. And then finally, up to 1st of July, it is like this. So a person, an investor who started SIP in index, right, is sitting at 50% returns, while a person who has directly invested in the index is sitting at about 225% returns. So that is the difference. And also, we must appreciate that this gentleman who has invested in absolute Sensex, he invested whole money at the beginning of the period, while this gentleman is investing over a period of time. So average investment by the second person is way less, and because it is staggered, and so are the returns. Okay, there is a very small kind of a pause. As you may be aware, we have launched a drive. In fact, government has launched a drive of mass vaccination, and we also want to be a small, maybe very, very minute contribution. We also want to make a, though whatever small contribution is there, we also want to make. And to promote that mass vaccination, we are providing 1 month extra subscription to those subscribers who subscribe to a new product or extend subscription to any product, to existing product, between 25th of June to 4th of July. So tomorrow is the last date, and for that you have to share your COVID vaccination reference number. So what is the best tool to measure the SIP performance? Absolute returns. Of course, we have seen that absolute returns we are measuring with respect to the absolute Sensex. Okay, then average returns, then internal rate of return. Maybe you may not be knowing it. So let's see how we perform in this poll. I request all of you to participate. This gives you an experience, a learning, and also gives us an opportunity to see how many investors are aware of the various tools, of the various measurement parameters. And here I see a very good result. Only 5 seconds are left. 74% of the participants have voted. I request all of you to please participate. Okay. Here are the results. And I'm very happy to say that 52% of the participants have gone for internal rate of return, and this is the right answer. Yes, internal rate of return is the right answer. The moment I say IRR, I'm very sure many of you might be thinking that, oh God, how to calculate IRR? Yes. Of course, now ready-made formulas have come, ready-made Excel sheet has come wherein you can put the values and find the IRR. In case of SIP, we'll see how simple and how fast it is. Okay. Now, before that, what are the types of SIPs? SIPs People do it in mutual funds. Yes, it is the majority of the investors, they go for mutual funds because those are diversified and ease of, I can say, the convenience. Automatically the money deducts from your bank account and automatic investments are made, and as per your choice of date. There is also a SIP of basket of stocks. Many of the websites, many of the brokers, they are offering a basket of stocks, and you can buy some fixed number of shares every month and a fixed date. Maybe they are providing you 10 stocks and you can buy some 5 shares of this, 2 shares of this, 3 shares of this, 4 shares of this, and like that. There is also a kind of a SIP, and there is a unique type of SIP. There is one stock at a time, and this unique type of SIP, we are running it. I mean to say the Smart VRC, and the name of the product is Smart SIP. Already we are running this scheme from pretty long time, from last 4-5 years, and already we have a basket of about 18 stocks. What we do is every month we advise one stock amongst those 18, only the one stock. And what is the criteria? Criteria is we pick the most undervalued stock from that basket. So how it has performed, I will share the results also. This is the performance. The scheme was started on 5th of October 2016 and up to 3rd of July 2021. Investment is 5.7 lakhs. How we arrived at investment of 5.7 lakhs? We are assuming that you are investing 10,000 rupees every month. You can invest whatever it suits you, your budget or your requirement, rather I should say. And the cumulative investment is 5.7 lakhs and the present value is 9.43 lakhs. Now there are different ways to calculate the returns. Let's consider one by one. So our total investment is 5.7 lakhs. Present value is 9.43 lakhs. If I want to calculate the absolute returns, then it is very simple. Present value minus total investment into 100 divided by total investment. It is 65.44%. Now 65.44% for 5 years, little less than 5 years. So average, if I say average, then it is about 12.5% or 13%. Okay, this is one type of calculating the returns, but as I said, this is not the correct way because we have not invested 5.7 lakhs at the beginning. We have invested in a staggered way. So this is not the right way to calculate the returns. Compound returns. So this is the formula for compound returns, 10.49%. This is also not correct because, as I said, we have invested in a staggered way. Every month we have invested, not in a one time. So this is not applicable to calculation of SIP. Then comes the XIRR return. This is XIRR formula I have used instead of IRR. IRR is internal rate of return and X is variable internal rate of return. Variable in a sense, in an IRR you are investing every month, while in XIRR you can invest even at different dates. Not necessary that you have to invest every month in a fixed date or anything. So why I have used XIRR? Because it is helpful in calculating your non-SIP returns also. I will show you how. So how it works? It is an Excel formula. Here you have to create two columns. First is the date, second is the investment. In the date column, you have to put only the dates in the date format. If you don't use the date format, then this formula will not work. And here you will get some error. Hash num, it will be written like that, hash num. So you have to format this whole column into a date format, and then why it is minus 10,000? Because money is flowing out, right? And in the end, money is flowing in. So if today I want to close my SIP, smart SIP, how much amount I will get? I will get 9,43,000. So this is the formula XIRR First is the set of values, that is the range of values. Then second is the dates, and then third is the guess. Because there is a guesswork, if you can omit, then also it will not matter. Still, you will get the answer. So XIRR values means these are the values. So whenever you are making an investment, it has to be minus, and when you are getting back, it has to be positive. So I have invested 10,000 rupees every month in Smart SIP, the product what we are referring to. And in the end, maybe for today, if I want to encash, then what would be my return? Values means this, you have to select this range, N1 to N60. I have not shown you the Excel sheet. Actually, it is for this is for 60 months. Then we have the dates. This is the date, M1 to M60. When you enter this, then you will get the answer. This is 20.89%. So in Smart SIP, we have generated 21% returns. This is as good as you can say kind of a CAGR. I cannot use the word CAGR because actually it is like this. It is the summation of the CAGRs for each and every investment, and then the average. So it is internal rate of return is 21%, which is, I can say, a very, very good return, because we are hardly making any changes. Hardly we are making any exits in Smart SIP. Hardly 2 or 3 exits are made in a year. And we are investing only once in a month. But as our technique is way different, we are investing only in the most undervalued stock among the 18 stocks, among the 18 stocks of the basket. So this is the kind of returns we have generated. And as I said, if you calculate the returns based on average returns or absolute returns or compound returns, those will be far less. And also those are meaningless. So the only formula which is most suitable is XIRR. You can use also IRR. That is also useful, equally good, and same results. You will get the same results. Now, I ask you one very simple thing. When you go to a new advisor, suppose you are searching for a new advisor, what you ask is how you measure his success. What is the success parameter you look for? I will tell you, because I get a lot of calls, and what people ask is how much returns you have generated. What is your success rate? Now, what is success rate? Success rate means what they say is how many stocks have achieved the target and how many have hit the stop loss. Now, for last 15, 16 months, I'm very sure if you approach any advisor, and he will tell you his success rate is more than 90%. So how you make the difference? Whether he has advised speculative stocks or whether he was very safe, you cannot make out. It is very, very difficult. So also one more thing is that if suppose an advisor has advised during the first 6 months, a lot of stocks he has advised, and during the last later 6 months, he has advised very less number of stocks, then I'm very sure his success rate will be very, very high, because the Sensex is continuously on the up move. So the best way is to ask for XIRR, which is I'm very sure no advisor calculates, but it is a very useful tool, and it is also useful for you. I will give you an example. In Smart Gains, we are advising one stock every week on every Wednesday with the name of pick of the week. So what is XIRR? We have calculated XIRR and we find that it is 107% for last 15 months. What does it mean? It doesn't mean that every stock has given you 107% returns. What it gives you a measure is your kind of internal rate of return for every stock. Every single stock is 107%. So as in the case of SIP, there was a fixed date of the month. Here it is no fixed date. So every Wednesday, if I assume that I invested 10,000 rupees, and when it achieved the target, when we advise you to sell, what was the price. If it has hit the stop loss, then it is definitely going to be less, and then you have to use that. You have to put the whole range in the formula XIRR, and it gives you a simple return. So once you prepare the Excel sheet, then every Wednesday you have to make only one entry. That's all, and it works fantastic, very well. And XIRR of 107% means it is not only the stocks which we have advised during March, April, May, June, July of 2020, but this is also applicable to the stocks which we have advised January, February, March, April, May, June, July of 2021. Yes. So there is the one way of measuring the individual stock returns. Also in smart gains, we have SBP, that is smart billionaire picks. Here we need not have to use XIRR here because we are not investing fresh money in SBP. It was a one-time investment of 1 lakh. So here you can use the absolute returns. If it is for 1 year or little more than 1 year, then you can use absolute returns. If it is for more than 2 years, then go for compound returns. So for last 16 months, SBP absolute returns are 169% against Sensex absolute returns of 102%. You must be remembering that during March, I think on 23rd of March, Sensex was at about 26,000, and today it is 52,300. So that is why it is 102%. Then we come to the smart multi-baggers. Here the XIRR is 131%. It is better, I should say. In smart gains pick of the week, it was 107%, and here it is 131%. This for smart multi-bagger. Here, much lesser number of stocks we have advised. What is the advantage of SIP? As I said, the returns are clipped because you are not investing in one go. So the volatility is reduced, but what are the other advantages? There is a discipline. Okay, every month you have to invest. So there is one thing. And secondly, instead of investing a full amount in one go, you can start with a small amount. You can invest, start with maybe 2,000 rupees a month. Okay, and that over the period of time gives you the benefit of compounding. And also, you need not have to time the market. You need not have to worry that where the market is heading for. Every month on the fixed date, you have to make the investment. And then also you learn to digest the roller coaster movements. See, picking a good stock is only one part. The most important part is how you are able to control your emotions when the market goes down or when the market goes up, how you are able to control your greed. Like in the present situation, as I can see from the portfolios we receive from the investors, from the subscribers who are availing the services of their brokers and also of their other advisors, we can see that the speculative part is increasing. Yes, because of the greed. We are always hungry for more and more returns, but the Sensex is stable around 50 to 52,000, but we want more and more returns. And in the process, we go for more risk. So one of the advantages is the roller coaster movement. If you are a new investor, then for you, the best part is go for a smart, SIP, systematic investment plan. You can start with a small amount. You may not have to time the market, and you will learn how to digest the volatility. And then in the end is the power of compounding. Over a period of times, you will realize that I saved only 5,000 rupees per month, but after 5 years, I got such and such lakhs, 5 lakhs, 6 lakhs. That is the kind of returns you get. There is one more advantage which I have not mentioned here. It is a kind of a forced saving. Yes. What we do is whatever we get in our hand, we try to spend it across our various needs. Also, at times, the things which are not necessary, there also we invest. So the best part is first you do it SIP. So on the every first of the month or maybe on the second of the month, whenever you get the salary, a fixed amount gets deducted from your bank and you get less amount. So it is a kind of a forced saving and it works very well. Now, at times, what happens? You try to compare your returns with the Sensex, and you find that your returns are not that good, and in fact, very poor. I will give you an example. What happened during last, I think last 2018 to 2020? What happened is mid cap and small cap underperform the large caps. So those who have made SIP in mid cap, this is the gray colored graph, and small cap, that is the yellow colored graph. So their returns were hugely negative when they were seeing that the Sensex is rising. Sensex is rising by good percentage, but your returns are negative. Not only in zero, it is negative. So don't get worried. Try to understand that what kind of mutual fund or whatever scheme you have adopted, what kind of investments they made, whether they are investing in mid cap or small cap, and how they are performing. And you have to wait patiently. It cannot happen that mid cap and small cap will keep on underperforming the large caps. Now, this is something out of the box. In a sense, we are talking about SIP, and what I am asking is which sector will perform the best next year. Let me see. How you respond. Which sector will perform the best? IT, telecom, infrastructure, or I can't say. So here we are getting a bit better response in terms of the number of votes. Yes, 5 seconds left. 20% participants are still there to ask their option. Okay. So here is the result. 41% and highest one say IT. 7% go for telecom. Of course, there are very few players in telecom. And 36% go for infrastructure, and 16% say that they can't predict. Well, I'm not going to give you my view. Rather, I would leave it for the next webinar. It's going to be very interesting, and I will show you how to find out which sector is going to perform the best. Yes. Of course, every time I request you, and we want a favor from you. If you have a friend, investor friend, and he's interested in investments, then you can forward our WhatsApp number. As you know very well, we have WhatsApp groups formed on the basis of the cities, and we can include you in that group. And hardly on an average, we are making only one. We are posting only one message per day, and it is an admin only group. And this is the WhatsApp number. You can send a request. We can also include you. 9755920780. Smart word. A good nervous system is more important than a good head in stock market. Yes. Picking a stock, as I have referred this in the presentation also, picking a stock is only, I can say it is even less than half done. What is more important is how you remain rational. So with this, we have come to the end of the presentation. Now, question and answer session will begin. And you can raise your hand with the symbol appearing in your reaction, and I will unmute you and you can speak. Also, if you can use the chat box, there also thanks for sparing your valuable time. In mutual, okay, there is a question in the chat box. In mutual funds, please guide shifting from regular to direct plan implies stopping SIP in regular and starting one in direct plan, or invested amount in direct regular plan. Sorry, or invested amount in regular plan needs to be redeemed and invested lump sum in direct plan. I don't have much idea about this mutual fund, but what I can say is, as far as my knowledge is there, you need not have to redeem. Only you can change your plan from indirect to direct. Will it be a good idea to shift from existing mutual fund portfolio to entire stocks portfolio? I would require more information to which stocks portfolio you are referring to. Okay. Any other query? I want to start small investment through SIP. I am not a big investor. Everyone starts very small. I started with 4,000 rupees. So you need not worry. And rather, I would say that even if you are a big investor, start with a small investment. That is the best way to enter into stock market. First, try to understand the rules of the game. Can I subscribe to your product? Yes, definitely you can subscribe. Its subscription charges are very low. It's only 3,000 rupees for 1 year. And once you subscribe, you will get an access to our all past recommendations and also the basket of the stocks which we have. Yes, Mr. Sandeep Soni, kindly unmute yourself. Yes, sir.
Good evening, sir.
Good evening.
I want to know what is your conclusion, whether we should go for SIP or not. Because in the first case, you have explained that the returns are zero.
No, it is not, not like that. It was for a period of only 11 months. So what the message I was trying to give you is that if the market starts at 100, if it goes up and then comes back to 100, then your returns may be zero or maybe negative also if you are in SIP. But over a long term, market always goes up. So you need not have to bother. You get good returns. But of course, as I compared in Smart SIP, we have got 21% IRR, while in Smart Pick of the Week, we have got very good returns of 107%, and Smart Multi-Bagger about 131% XIRR, and in Smart Billionaire Pick also for the last 16 months, we have got very good returns. So if you are, if you are an employee, then it is not possible that you can invest a big money every month. So you can do one thing, you can invest a lump sum amount. Also, you can keep on adding through the SIP route. That is the best way for employees.
Okay, thank you.
Okay, there is a clarification has been provided by that gentleman. I invest 50. Let me rephrase. Will it be a good idea to shift from existing mutual fund portfolio to smart gains stocks portfolio? See, it is your decision. If you are able to get more than 26% CAGR from your existing mutual fund, then there is no need to shift to our portfolio. It is up to you. Okay, please explain all subscription charges and ideas. That kindly send me a request at our WhatsApp number, that is 9755 920 780. I want to do a SIP. I want to do a SIP at present, but nowadays NAV is high. Should I wait? I think the best answer would be to show you the graph. Wait for a minute. I'm sharing the screen. This is the BSE Sensex graph, and this is from 1986 to till date. And you can see wherever anyone has invested at any value, he has gained. So always invest with an objective of long-term investing. It hardly matters what is the present NAV. So that is the message I want to give to all of you. Don't bother about the NAV. Don't bother about the current market levels. You will never be able to predict what will be the next. So the best way is always look for long-term investment. What is the XIRR return of smart SIP? Please repeat. It is 20.89% from last 5 years. For obtaining 15% CAGR, what is the best way? Invest in mutual funds or monthly SIP? That is up to you. You can search for mutual funds. As I said, I have very limited knowledge about the mutual funds. So you will have to do the homework at your end. Which mutual fund gives you 15% CAGR from long-term point of view? Don't look for last 2 years or 3 years performance, because during last 1 year itself, the Sensex is up by more than 100%. How to select stocks for SIP? Since SIP is for long-term, what we do is most of our stocks are large cap and also some mid caps and small caps also. So because if you have to get very good returns, then you need to invest in some medium-sized companies also. Yes, this is a very good statement. I feel in case of SIP, the risk is lesser, so returns will be lesser in comparison to other schemes. Yes, you are 100% correct. Risk is less, volatility is less, and returns will also be little less. But it all depends what stocks you select. Mr. Rajesh Chokam, kindly unmute yourself.
Sir.
Yes, sir.
Can you just repeat that XIRR? In that formula, some guess was there, value, date, and guess. Can you just explain that?
Okay.
In your smart SIP, you have generated 21% returns. You are given the formula.
This is this one?
Yeah.
When you in Excel, when you write is equal to XIRR, automatically it will show you the formula.
Okay.
Shall I show you?
Yeah, can you please, sir, so that it will be very useful. I mean,
okay,
to compare the SIP.
Are you able to see this screen?
No, it's a blank, no? I mean,
It's blank. Okay.
yeah, gray.
Hmm. Okay. I will create here itself. This is basically not an Excel, it is a table. I don't know why you are not, I'm not able to share this thing. Just a minute. Are you able to see Excel
Yeah,
sheet?
yeah,
Excel sheet?
yeah, yeah. Yes, yes.
So here you have to write date, and here the investment,
Okay, okay.
and here you write equal to XIRR, and you can see
Okay.
automatically it has generated the rate returns, the internal rate of return for a scheduled cash flow. Now you
Uh-huh.
write this way, it will ask for the values. Values means here you have to select. Suppose I
Okay.
select like this for 3 course, then it shows the dates. So you have to select the dates. So close the bracket and enter. Because we have not entered any date or any investment, so it is showing an error. So once you enter the date, you will get the number here. You try at your end. Otherwise, you can ask again in the second in the next webinar, or even ask you on the WhatsApp also. It is very simple. Kamlesh Barna, kindly unmute yourself. Kamlesh.
Yes, sir. Yes, sir.
Yes, sir.
Yes, sir.
Yes, tell me, sir. You have any query?
No, I read your book. I purchased your book, that millionaire one you wrote. It
Okay.
is really fantastic. I can say it is one of the best book ever I read. And I am a hobby. I have maybe 300 books, stock market.
Oh, I see.
Okay. And I am very much, every day you can say 200 pages I am reading, each book.
Okay.
Okay. And I finish your book maybe within 2 days. It was fantastic. So everybody has to read that book. Really. It's worth.
Thank you. Thank you, sir. You are from which city, sir?
Actually, sir, I'm living outside India now, but basically from Gujarat, Ahmedabad.
Okay.
Yeah, I purchased your, I remember 2008, a smart work again. I think there is a 2 option, no? 1,000 rupees before it was.
Yeah, yeah.
That was yen or something. I purchased 2 reports, JK paper. I remember it was really, means I got good returns, sir.
Okay. Thank you.
Yeah, from the actually, see, I am very much interested to join your webinar, but unfortunately, whenever you are arranging in Ahmedabad, okay, I'm here, so I'm unable to attend actually.
Okay. Okay.
It's good to have.
So presently you are in which country?
I'm Bahrain, sir, Saudi Arabia, Bahrain.
Bahrain. Okay. Okay.
Yeah.
Thank you. Thank you for the feedback, sir. Thanks.
Okay, sir. Yeah, thank you.
Should we track Nifty 50 P ratio for investing or withdraw? People say that if Nifty P is more than 25, then realize profits from mutual fund, and when it is about 15, then take more NAV. You can. Has it been so much logical and mathematical? Then it would never go. Nifty P will never go beyond 50 if it is so logical. It is not a stock market is not a pure science. So if you think that the Nifty 50p is high, it is 50, it is high, then you can do one thing. You can invest in your stocks and find what is the P ratio of your portfolio, P ratio of the stocks which you own. That is more important than tracking the Nifty 50p. If you're investing in Nifty, then it is up to you. But if you're investing in stock specific, then you should always focus on the stocks P ratio which you own. And also, we never try to predict the market. So we are always fully invested, and also I advise all of you to remain fully invested and always keep the best of the best 16 to 18 stocks in your portfolio. That gives you the best returns. Yes, maybe in the short term, your returns may fall behind the Sensex, but in the long term, they will far outperform the Nifty or Sensex or any other index returns. In Smart SIP, every month a new stock will be provided, or a stock with attractive valuation from already predefined basket of stocks. Most of the time, it is from the predefined basket of stocks. We pick the stock, but maybe once in 6 months, we may include a new stock and we may exit from the existing basket if we find that new stock to be more attractive than that stock. Whether small cap and mid cap would be flavor in the coming years, I don't know. What I know is whether it is small cap or mid cap or large cap, what I know is if the stock is undervalued, if it is growing at a very high rate, then no one can stop. No one can stop its journey. So that will outperform, irrespective of what kind of cap it is. So in 2011, Bajaj Finance was a micro cap, and today it has become a, I can say, very large cap, and still it is doing well. Which is more important, consolidated or standalone profit losses statements? Always go for consolidated statements. Smart Billionaire had risen from 1 lakh to 1 crore over a period of 20 years. What is XIRR? As I said, when it is a one-time investment, then you have to calculate compound returns. XIRR is to be used only when you are making intermittent investments. And compound returns are 26.6%, I believe. It is near to 26.6% for SDP. So with this, we have come to the end of today's presentation. Thanks for sparing your valuable time and also a weekend, very important, and in most of the cities, lockdown now ja chuka hai, and enjoy your weekends. And I'm going to give you a surprise for the next webinar. Soon I will share in the groups. It will be in a different way. Thank you very much. Thanks.